So, you're thinking about selling to the Norwegian market. Great idea. But before you jump in, you absolutely need to know three letters, MVA. It stands for Merverdiavgift. That's a mouthful, I know. It just means value-added tax. And honestly, understanding MVA is the key to unlocking one of the wealthiest markets in Europe. If you get it wrong, it can be really, really costly. But if you get it right, you're in. So, let's figure out this maze together.
Here's what we're going to cover. First, we'll talk about why you can't afford to ignore MVA. Then, we'll figure out exactly who needs to register, because the rules are a little tricky. After that, we'll dive into a special e-commerce solution called VOEC, walk through the official registration process, and then wrap it all up with how to stay on the right side of the law and avoid those nasty fines.
All right, first things first. Why should you even care so much about Norwegian VAT? I mean, it's just tax, right? Well, not exactly. We are talking about a hefty 25% rate and some pretty serious consequences if you mess it up. Let's really look at what's at stake here.
Look, the simple truth is this. If you're selling taxable goods or services in Norway, MVA is not optional. It's a fundamental part of doing business there. And let me tell you, the Norwegian Tax Administration, they're called the Skatteetaten, they are very, very good at making sure everyone plays by the rules, especially when it comes to online sales.
Just take a look at that number, 25%. That is the standard VAT rate in Norway for most things. And yeah, that's one of the highest in all of Europe. What that means for you is that the tax on every single sale is pretty substantial, and so are the penalties if you don't handle it the right way.
And the risks? They're no joke. We're talking about massive fines plus interest. We're talking about your goods getting stuck at the border, which is a total nightmare for your customers. You could even get blocked from selling on huge platforms like Amazon. And on top of all that, you lose the ability to reclaim VAT on your own business expenses in Norway. That's a direct hit to your bottom line.
Okay, so the big question is, do you even need to register? Well, this is where it gets really interesting, because Norway has one set of rules for its own local businesses and a very different set of rules for foreign businesses like yours.
So, if you're a company that's actually based in Norway, the rule is pretty clear. Once your sales cross 50,000 Norwegian kroner, that's roughly $4,600 over any 12-month period, you have to register for VAT. Simple enough.
But, and this is a huge but for any foreign business, that 50,000 kroner buffer, it completely disappears. For a non-resident company, you have to register from your very first sale. From $1, it's what they call a nil threshold. There's no grace period.
So you might be wondering, why are they so strict about this? It's actually all about fairness. This rule creates a level playing field. It stops a foreign company from being able to sell something cheaper than a local Norwegian shop just because they aren't charging that 25% VAT. It's really a way to protect their own economy. Makes sense, right?
Now, if you're running an e-commerce store, all of this might be sounding a little overwhelming. But don't worry. The Norwegians came up with a really smart, simplified system specifically for this situation. It's called the VOEC scheme.
VOEC. It stands for VAT on e-commerce. Think of it as a fast-track system for foreign businesses that sell directly to consumers. It lets you register easily, collect that 25% VAT right at your online checkout, and then report it just once a quarter. It's way, way simpler than a full VAT registration.
The key number you have to burn into your brain for VOEC is 3,000. That's 3,000 Norwegian kroner. The scheme only works if each individual item in your shipment is worth less than that amount. And I have to stress, that's per item, not per order. And also, some things like food, alcohol, and certain other goods are totally excluded, so you gotta watch out for that.
The benefits of using VOEC are, well, they're huge. First off, your packages are exempt from customs duties, which means they fly through the border much, much faster. But you know what the biggest win is? Your customers. They don't get hit with any nasty surprise fees when their package arrives. They pay for everything up front at checkout, and that makes for a much, much happier customer.
Okay, so what happens if VOEC isn't for you? Maybe you sell high-value items, or you sell B2B to other businesses. In that case, you need to go through the standard VAT registration process. And that entire journey starts at one central government website.
This is Altinn. You're going to get to know it well. It's basically Norway's digital hub for anything business-related. It's the one and only online portal where you'll register, file all your VAT returns, and talk to the tax authorities. It's really the one digital key you need to operate compliantly in Norway. So the standard process has a few clear steps.
First, you have to register your business entity itself to get a Norwegian organization number. Next, and this depends on where you're based, you might need to appoint a local VAT representative. Then, you submit your official VAT application. Once you're approved, you don't get a totally new number. They just add MVA after your existing organization number to show you're in the VAT club.
Now, that point about the VAT representative, it is absolutely crucial. If your business is located outside the EU or the European Economic Area, you must have a Norwegian-based representative who is basically on the hook with you for your VAT. But if you're based in the EU, the EEA, or the UK, good news, you get to skip that step and register directly.
All right, so you did it. You're registered. That's awesome. But the work isn't over, not by a long shot. Now we get to the final and most critical part, how you actually stay compliant and keep clear of those very expensive fines.
Once you're in the system, you've got some regular duties. You'll have to file your VAT returns electronically through that Altinn portal, and that's usually every 2 months. You've got to pay whatever you owe by the deadline, no excuses. Your invoices have to follow specific Norwegian rules, including showing your MVA number, and you've got to keep all your books and records for at least 5 years.
And what happens if you miss a payment deadline? Oh, it gets expensive, and it gets expensive fast. The penalty interest rate for late VAT payments is a whopping 12.5% a year. You really don't want to let that clock start ticking.
And that's just the interest. On top of that, there are straight-up fines just for filing late. This number, over 62,000 kroner, is the maximum fine for a single late or missing return. It just goes to show you how seriously the Norwegian tax authorities take their deadlines.
So what's the big takeaway here? It's actually really simple. You have to be proactive. You can't just wait for problems to happen. Proactive compliance is everything. You've got to understand exactly what you need to do before you even think about making your first sale. It's the only way to avoid these huge and, frankly, preventable headaches.
Look, Norway is an incredible market with amazing opportunities. And this MVA system, it might seem like a complex maze at first, but it is absolutely navigable once you know the path. So, the only real question left is, now that you know the rules, is your business ready to unlock all that potential the right way?